Hello, Marc Ostwald from ADM ISI with a look at the week ahead. Eminently with all the trade politics tensions that are now escalating with the US-China, US-Mexico threats adding to our concerns about US-China trade and indeed the threat to exports. Politics is definitely going to be playing a big role in the week ahead. There's also a visit by Donald Trump to the UK, which will be interesting in the context of the current Brexit impasse that we have. But it's also the usual start of a month of flow of data. So the week starts with manufacturing PMIs, and as we go through the week, we'll also have services PMIs. It will be recalled that the flash PMIs for the G7 countries were universally quite weak. We will want to see what the ISM looks like in the States, because sometimes the PMIs are more a reflection of sentiment and obviously a negative narrative around the US economy coming out of Wall Street than necessarily actual business flows. But it is starting to weigh all those trade tensions. Other items of note during the week, which we'll be paying particularly close attention to, are German factory orders, which are expected to post a second consecutive monthly rise. US auto sales, which are expected to recover somewhat, but be well below the sort of levels we've been used to of late, looking at a 16.8 million annual rate against 16.4 last time. And we obviously at the end of the week have US payrolls, where our usual sort of forecast of 175,000 is expected, still signaling a very tight US labour market. Other two key items of note for the week are the big central bank meetings. First of all, on Tuesday, we have the Reserve Bank of Australia expected to cut rates by 25 basis points, effectively a delayed rate cut from May because of the election. And on Thursday, we have the ECB meeting, which will be where we will be focusing on how they revise their forecasts. There should be some tweaks, probably a little bit lower, but not too low, because they don't want to be forced into taking further policy action. And we should also expect from the ECB some details on the next round of TLTROs, which are due to start in December. The ECB may indeed probably reach for an old Bundesbank trick of trying to guide markets away from Eurozone inflation numbers, which are expected to be very weak next week. Headline 1.3, core possibly down as low as 1%, which should be a trigger for action. And guide people in the direction of the stronger credit growth numbers that we've been seeing and have been reported this week, second strongest credit growth to private sector non-financial corporates since 2009. But as I say, politics likely to rule the roost.